All right, guys, Sean here again. Another video. I want to talk about finished auctions, unfinished auctions, and how this ties into the context of reversals or continuations. So, a lot of traders, they like to do bottom tick reversals from the lows or from the highs and try to time like 10 o'clock reversals or supply and demand reversals. But there's a way to see and confirm if your reversal is going to happen or if prices are just going to keep blowing right through the levels. So I'm going to show you real quick on the left side. There's actually one developing right now. Before we get into what everything is, if you just look right on the left side, right here at the highs where we see these zero prints. I know I have it in black, but you get what I'm saying. These zero prints here. And then if we look down at the bottom, we see a 23 and an 11. So we have two numbers trading there. And then we have these red lines down below, above. So let's look over here to the finished and unfinished auction. Everything here refers to the auction market theory that there's going to be bidders, people having a bid, and people on the offer in the entire market. There's going to be makers and takers. Makers are passive liquidity. They are putting in orders at the market into the order book that are visible. And then there's takers, which are market executions, aggressive buyers or sellers at the bid and the ask that we can see on the footprint. So the market is actually just a continuous auction. Buyers are always going to bid and the sellers are always going to be on the offer. At each auction that occurs on each candle, at each price, either finishes or remains unfinished. So when it finishes, there's no volume left at the highs or the lows. Price explores elsewhere, right? So it reverses. When it remains unfinished, there's excess supply and demand left over. So price will likely revisit and see what kind of bids and offers appear when price gets back to that point. So over here on the left on my charts, I set up these red lines at the lows, only at the lows, and I've set up these blue lines only at the highs. And if I zoom out, I'll start to see them all over the chart. So those are unfinished auctions to me. So we can go in and look at the details later of what it is on the bid and the ask, but look how every time there's a line drawn, price moves away and then comes back to finish off the auction. So the likelihood of price coming right now to these levels, these red lines right here, is highly likely. And I started making this video when price was up here. That's why I started, because I saw the failed auction. So let's go back to the document. The process that I'm speaking about is what drives the market toward what is called fair value. Everyone that thinks about a fair value gap, you have to understand what fair value actually is. The market's either in discovery mode or it's in agreement mode. Either an agreement on price between buyers and sellers, or one-sided market where the market is exploring price and there's aggressive buyers or sellers on one side. So that's what actually drives the market. So when you have a finished auction, you're on the footprint, you're going to see at the very high or the low that the bar, they print a very tiny zero bottom. Look, there goes price all the way to the lows to finish off the auction. The very high or the low of the bar has zero volume on one side. There's no buyers left on the ask and there's no sellers left on the bid. So the market becomes exhausted and at the extreme, and the auction is finished. So let's look back over at the chart. Look at the zero print on 2 consecutive 15-minute candles at the highs. Now, this doesn't mean that every time there's a zero print, you're going to get a reversal. It just helps you confirm when you think there might be a reversal. There's a few other things that we can use to confirm that as well. So now an unfinished auction is when price ends with volume still at the extreme. There's volume, plenty of volume being traded, and price moves away. So you'll see down here, if we go back to the chart, that there's plenty of volume down here at the low. There's 23 people hitting the bid. There's 23 offers on the bid and 23 and 11 on the ask. So there's plenty of volume being traded. It's not like the zero print over here on the bid and this zero print on the bid as well. You know, there's nothing being offered to the next level of the ask. There's nothing that can be traded on the next price level. Here is fine. The bid and the ask can be traded in the next price level. So the chances and the likelihood of price coming back to that level is okay. I don't know what number it is, but it has a high likelihood of coming back to finish off the auction. What it does after that requires some context. So when we look at the footprint chart that like I just showed you, we want to see a zero print at the extremes, price reverse back, and the counterparty will then sponsor the move. So if we're running up into a level, zero print on the bid, and then we start to see the price fall and then sellers step in on the aggressive side, that's a reversal. And then the unfinished auction is if there's a top of the bar, there's still plenty of ask volume, then chances are it will come back. And the same at the bottom. If there's plenty of bid volume, like down here, if we look, there's plenty of bid volume, then the price will come back and at least somewhere in that area to offer that bid again. So I want to tie this all back into how it goes with fair value. So finished auctions, they mark the edge of exploration. So they've done price discovery, and when there's nothing else to be traded, they reverse back into fair value. The market exhausts participants and it tends to snap back to the fair value area, which is the point of control or a high volume node. And then fair value is then established in that area, in that high volume node, because that's where participants have done business before. So there's going to be business there again. And with the unfinished auctions, that's unfinished business. So the market will often revisit these extremes and they're going to test it again because the fair value has not been established yet and it's not been agreed upon, right? Because it's lopsided. It's not an agreed upon area where the volume is equal on the bid and the ask. So a few ways to think about this when you're looking at the footprint chart is the finished auction. Everyone's done bidding here. We're going to go back to a price where there's more people comfortable to trade. And then unfinished is not everyone's done yet. We're going to return here and clean this up. We can see, let's go all the way to the left side. Go back a little bit. This red line here, it's a little hard to see, has been in there since August 12th. And we came and took out all these red lines that you see here. One there, one there, one there, one there. All those unfinished auctions had a chance to finish the auction. If you look, there's only a few of them that price actually just pushed right through instead of stopping and actually continuing an auction and establishing fair value. So we're not using these lines as saying, oh, price is going to come back here. I know it because there's a line. It's just if you use this in context, if you have a short bias and the very, very high of the candle right here has no line, there's no line here. So that means that the auction was finished. So what you can do is zoom in. You go to the footprint, try to match it up. It's right here. And when we look closely, there's no real volume at the extremes. We see high volume trading up at the extreme, which means that there was absorption, right? Because if there was high volume, that means that the buyers that were aggressive on this whole candle, this entire candle, had extreme aggression on the ask, drove price up, but then it was met with sellers, and then there was a failed auction up top, not unfinished, but failed. And then the following candles, the subsequent candles, had failed auctions. So the next few candles on the 15-minute time frame had nothing on the bid. And then after that, price just dropped, and that can confirm a reversal. So something simple to look at, something easy to use, and yep, hope you can use it in your trading.